We're talking about gold funds today, and there are different ways to approach gold. And interestingly enough, we've seen a very marked difference in the returns that these funds have given. So let's bring in Dhirendra Kumar to find out what's causing the difference in these returns. Dhirendra, thank you so much for joining us. Let's take a look at these gold funds. Now, there are three types of gold funds in the market. There are gold ETFs that mirror the price of gold, gold funds that invest in gold ETFs, and finally gold mining funds. Now, the interesting thing is the returns over the last year are very, very different between these three sets of funds. Dhirendra, tell us what's causing this difference and why there's such a large difference between these funds.
One is that, it has always been like that. I would say that gold funds are high-octane version of gold prices. And gold ETF and gold funds, the difference is a constant, which is 1.5%, which is the cost of running an open-end fund. And gold ETF is a clear surrogate of the gold prices. So why gold mining companies and the gold funds actually invest in gold mining companies, and gold mining companies, they tend to be, if the gold prices are going up, they tend to command a premium. And if they are going down or the outlook is very bleak, they are steeply discounted, and that is what we have seen. We have seen a complete turnaround in the outlook for gold mining companies, and that is likely to prevail for I don't know for how long, but it's unlikely to be a very short-term phenomenon. So from that standpoint, I think they are out of favor, and they are likely to remain that way, and that is the reason why. And it has always been like that. When gold prices were going up in the early phase, these were the same funds which used to go up much more sharply than the gold prices.
But Dhirendra, for those of our viewers who are looking at investing in gold for the long term, would you recommend they use gold funds or gold ETFs at this point?
Yes, if you can, it is always the cheaper version, because when you buy the gold fund, the open-end fund, it does nothing but, buys gold ETF on your behalf and gives you an account statement. And this particular process costs you 1.5% or 1% annually. And I don't think it is worthy of that cost. So if you can, but first and foremost, I would urge that, if you are thinking of making an investment into gold, rethink.
Okay, rethink your investments. In fact, we have a viewer who's asked that very same question. Ramasubramanian has written in. He wants to know if it's the right time to invest in gold. Dhirendra, a lot of viewers are wondering that since the prices have come down, is this a good time to buy gold and to add it as an asset to their portfolios? Would you consider gold a good asset at this point?
I don't believe in all these theories. Gold remains an unproductive asset. It will have some worth, but it does not produce income, and it has nothing intrinsic to it which will increase its value. So don't even think of it as an investment. At most, there are two reasons why you should have gold. One is that you want to make small investments for consumption at a future date. So that is simply, buying convenience. You can invest 500 rupees in a gold ETF to be exchanged for your daughter's wedding, and you redeem those investments, exchange that with real jewelry. That's one way of looking at it. The other is a short-term bet on gold direction, and this is a nicer way than actually having a gold bar or anything such thing. But that is a short-term thing, and that is meant for professional, sophisticated investors or investors who have that appetite and the temperament. Having a constant allocation to your portfolio? No, I don't believe in any of those theories which gained ground recently.
All right, Dhirendra, thank you so much for answering our questions. Dhirendra, they're being pessimistic on gold. Email ID is on your screen. You can write to us if you have a question for Dhirendra Kumar right now.